Hey there, folks. Iggy here from the Investing Iguana. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with a total of 460,000 reads. You know, in the world of finance, it's always exciting when a company comes along that could potentially shake things up. Today, we're going to talk about one such company, iFAST. Is it the next big thing in finance? Well, that's what we're here to find out. In this video, I'll be breaking down iFAST's growth strategy, their involvement in the Hong Kong ePension project, and their acquisition of a UK-based digital bank. I'll also be explaining some complex financial concepts in a way that even a high school student could understand. So, buckle up and let's dive right in. iFAST Corporation, a leading fintech company based in Singapore, has set its sights on achieving some impressive milestones in the coming years. The company, which provides a wealth management platform and a range of financial technology solutions, has been growing steadily over the past few years. In fact, iFAST has seen its assets under administration, AUA, increase from around 8.05 billion Singapore dollars in 2018 to over 19.83 billion Singapore dollars in 2023, representing a compound annual growth rate, CAGR, of approximately 20% during this 5-year period. While this historical growth rate is slightly lower than what iFAST needs to achieve its ambitious target of 100 billion Singapore dollars in AUA by 2030, the company remains optimistic about its prospects. The goal, which was set back in 2018, is undoubtedly challenging, but iFAST believes that it is still within reach. To put things into perspective, if iFAST maintains its current CAGR of 20%, it would reach an AUA of around 77 billion Singapore dollars by 2030. Although this falls short of the 100 billion Singapore dollar target, it demonstrates that the company is not too far off the mark. With a slight increase in its growth rate, coupled with strategic initiatives and favorable market conditions, iFAST could potentially bridge the gap and achieve its objective. The company's confidence in its ability to reach this goal stems from several factors. Firstly, iFAST has been consistently expanding its product offerings and enhancing its platform to better serve its clients. By providing a comprehensive suite of investment options and tools, the company aims to attract more users and increase its market share. Additionally, iFAST has been actively pursuing growth opportunities in key markets such as Hong Kong and Malaysia, which could further boost its AUA in the coming years. Moreover, the COVID-19 pandemic has accelerated the adoption of digital financial services, creating a tailwind for fintech companies like iFAST. As more investors turn to online platforms for their wealth management needs, iFAST is well positioned to capitalize on this trend and capture a larger share of the market. iFAST Corporation, a prominent wealth management fintech platform, has been making bold moves to expand its reach and capabilities. The company is not content with resting on its laurels and is actively pursuing ambitious goals to drive future growth. One notable development is iFAST's involvement in Hong Kong's eMPF, Mandatory Provident Fund, platform project. The eMPF platform aims to revolutionize the pension system in Hong Kong by providing a centralized, electronic platform that will streamline and automate the administration of eMPF schemes. This will lead to improved efficiency, reduced costs, and a better user experience for the millions of employers and employees covered under the eMPF. iFAST's participation in this transformative project positions the company to play a key role in shaping the future of retirement savings in Hong Kong. Another exciting venture for iFAST is the acquisition of a digital bank based in the United Kingdom. In 2022, iFAST completed the purchase of BFC Bank, a fully licensed bank operating in the UK. Rebranded as iFAST Global Bank, IGB, this strategic acquisition allows iFAST to offer digital banking services to its customers, creating a more comprehensive and integrated fintech ecosystem. With IGB, iFAST account holders can enjoy a range of features such as multi-currency deposits, international payments, currency exchange, and remittance services. The digital bank also enables seamless integration with iFAST's various wealth management platforms across different markets, providing users with a unified and convenient experience. The addition of the digital banking capabilities through IGB is a significant step forward in iFAST's journey to build a truly global business model. By combining its strong foundation in wealth management with cutting-edge digital banking services, iFAST is well positioned to cater to the evolving needs of investors and consumers worldwide. The company believes that the future of finance lies in the convergence of wealth management and digital banking, and it is proactively adapting to this trend. These strategic moves, including the involvement in Hong Kong's eMPF project and the acquisition of IGB, are expected to be key drivers of iFAST's growth in the coming years. While there may be some initial challenges and costs associated with these ventures, the long-term potential is immense. iFAST's management is confident that these investments will pay off and contribute significantly to the company's profitability and market position in the future. Let's take a closer look at iFAST's involvement in the Hong Kong ePension project, which is an exciting development for the company. iFAST has been tasked with two crucial responsibilities in this project. Firstly, they are in charge of building and maintaining the eMPF platform, which is a digital solution designed to streamline and enhance the efficiency of the Mandatory Provident Fund (eMPF) system in Hong Kong. The good news is that the platform is fully developed and ready for action. The next step is to start onboarding participants, which is scheduled to commence in the second quarter of 2024. It's important to note that while the assets in the eMPF won't be directly added to iFAST's assets under administration (AUA), the project has already had a positive impact on the company's financial performance. The revenue generated from the development and maintenance of the eMPF platform has given a significant boost to iFAST's top line, meaning their overall revenue has increased. Additionally, the project has also contributed to an improvement in iFAST's bottom line, which refers to their net profit after all expenses have been deducted. This is a testament to the value and importance of the Hong Kong ePension project for iFAST, as it not only showcases their technological capabilities but also demonstrates their ability to secure and execute large-scale, high-impact projects. Indeed, the impact of iFAST's strategic initiatives is already making a significant mark. The company's Hong Kong division, in particular, has seen a remarkable surge in profits for the first quarter of 2024. The profit has skyrocketed by more than 478% year-on-year, reaching an impressive 13.2 million Singapore dollars. This substantial increase can be attributed to the successful implementation of the ePension project, which has been a significant contributor to the division's revenue. However, it's important to manage expectations for the upcoming quarters. While the first quarter of 2024 saw a significant leap in profits, the next few quarters may not follow the same trajectory. This is not necessarily the cause for concern, but rather a reflection of the company's strategic planning and investment cycle. The company is likely to reinvest its profits back into the business to fuel further growth and expansion. This could involve ramping up operations, investing in research and development, or expanding into new markets. As a result, the profit increase might not be as pronounced in the immediate future. That being said, the real ramp-up in profits is expected to come in 2025. This is when the fruits of the company's investments and strategic initiatives are expected to start paying off in a big way. The company has set ambitious targets for its Hong Kong business, including a significant increase in profit before tax by 2025. In addition, iFAST is also planning to automate customer service with in-house AI solutions by end 2025. This will enable the company to provide customer service support in over 50 languages, catering to clients worldwide around the clock. This is just one of the many ways that iFAST is leveraging technology to enhance its services and drive growth. In addition to its other initiatives, iFAST has made significant strides in the pension services sector. In June 2023, the company launched Oro Pension Services, a comprehensive digital solution tailored specifically for Hong Kong's Occupational Retirement Schemes Ordinance, ORSO, pension schemes. This service is a testament to iFAST's commitment to digital transformation and administration services for pension providers. The Oro ePension Services is a one-stop solution that enables users to easily perform a range of essential functions pertaining to their pension schemes. These include enrollment, termination, contribution, and withdrawal, all of which can be done via an online platform. The service also provides client engagement tools, such as a fund selector, portfolio chart reporting, and risk profiling. These tools assist users in making informed investment decisions and enhance the overall management of their retirement savings. As of now, the group is still in the preparation phase for ORSO, with contributions expected to start in the fourth quarter of 2024. However, more significant contributions are anticipated in 2025. This timeline aligns with the company's strategic plan and its goal to become a global player in digital banking, wealth management, and pension administration solutions. Unlike the Mandatory Provident Fund, eMPF, the ORSO scheme will contribute to the group's assets under administration, AUA, and net recurring revenue. The AUA is a measure of the total market value of investments managed by a financial institution, and net recurring revenue is the portion of a company's revenue that is highly likely to continue in the future. For iFAST, this revenue is generated through trailer fees, platform fees, and wrap fees, calculated based on a percentage of average AUA of investment products distributed on the firm's platforms. iFAST Global Bank, IGB, a key division of iFAST Corporation, has been making significant strides in its operations. One of the notable achievements of IGB is its success in attracting deposits. In the latest quarter, the bank reported a whopping 515 million Singapore dollars in deposits. This represents a substantial increase of 476% year-on-year, demonstrating the bank's growing appeal to customers. The customer base of IGB is truly global, with cash deposits coming from approximately 70 countries. Interestingly, about a third of these deposits originate from the UK. This international reach is a testament to IGB's robust banking services and its ability to cater to the needs of customers from diverse geographical locations. iFAST Corporation recognizes that there is a strong demand from customers to open a bank account outside of their home countries. This trend can be attributed to various factors such as the desire for financial diversification, the need for international transactions, or the pursuit of better banking services. IGB, with its digital banking platform, is well positioned to cater to this demand. While the banking market is highly competitive, especially for high net worth individuals, iFAST has identified a unique opportunity in serving the mass affluent segment. The mass affluent customers, who are typically underserved by traditional banks, represent a significant market potential. These are individuals who have considerable wealth but do not meet the criteria for private banking services. iFAST, through IGB, aims to fill this gap by offering tailored banking services to the mass affluent segment. The bank's offerings are designed to meet the unique needs of these customers, providing them with a level of service that goes beyond what is typically available from conventional banks. This includes features like multi-currency accounts, competitive interest rates, and a seamless digital banking experience. You might be pondering, what will happen if iFAST doesn't achieve its ambitious target by 2030? This is a pertinent question, and the answer lies in the power of compound growth. Suppose iFAST only manages to grow its assets under administration, AUA, at a compound annual growth rate, CAGR, of 20%, which aligns with its current growth rate. In that case, the AUA will still reach a remarkable 70 billion Singapore dollars by 2030. This represents a significant increase from its current AUA, which stood at a record high in the first quarter of 2024. Here's where it gets even more intriguing. If iFAST continues to grow at a CAGR of 20%, it would only take an additional 2 years to achieve an AUA of 100 billion Singapore dollars. That's correct, just 2 more years. This is the magic of compounding, where the growth of an investment becomes exponential over time because the earnings from an investment are reinvested and generate their own earnings. So, whether iFAST hits its target by 2030 or not, one thing is clear: iFAST is likely to be a much larger business by 2030. The company's strategic initiatives, such as the launch of Oro ePension Services and the success of iFAST Global Bank, are already yielding positive results. These initiatives, coupled with the power of compounding, are likely to drive significant growth in the company's AUA over the next decade. In conclusion, while reaching the target by 2030 would indeed be a notable achievement for iFAST, the journey towards that goal is equally important. The company's consistent growth, strategic initiatives, and the power of compounding all contribute to making iFAST a much bigger business by 2030. It's an exciting journey, and it will be fascinating to see how iFAST continues to evolve and grow in the coming years. And there you have it, folks. That's the lowdown on iFAST. Whether they hit their target by 2030 or not, one thing's for sure: iFAST is likely to be a much bigger business by then. Remember, in the world of investing, it's not about the destination, but the journey. And what a journey it's shaping up to be for iFAST. Before we wrap up, if you found this video helpful, do me a favor and hit that like button. It really helps out the channel. And if you want to keep up with all things finance, make sure to hit that subscribe button and ring the bell for notifications. This is Iggy from the Investing Iguana, signing off. Remember, the journey to financial freedom is a marathon, not a sprint. Keep investing smart, and I'll see you in the next video.